Hi there, Richard here from Hola Prime. And unfortunately, we've recently noticed that you've reached your maximum daily loss limit. All right, so whether that's the 3% loss limit on any particular day or the 5% loss limit, depending on which challenge you partake in, unfortunately, this is a very common mistake that beginner traders make with these challenges. Right, and it's all got to do with improper lot sizes. So if you trade with a lot size that's too large, your position that you're controlling is too large. Although you could potentially make a lot of money in each particular trade, it also magnifies on the selling or on the loss side of things. So you can very easily also lose a lot of money. Right. So let's say, for example, you were trading with a $5,000 challenge and your maximum daily loss limit is 3%. That's only $150 that you can actually lose on a whole day, right? If you took a few trades, whether you reach that in one trade, on a couple of trades, or three trades, whatever the case might be, unfortunately, that's a rule that will then be broken. All right, so but fortunately, most of the platforms here at Hola Prime has got a risk calculating feature built into the platform that can assist you with making sure that your lot size is appropriate for each particular trade that you want to be taking so that you can at least take a few trades without reaching that maximum daily loss limit in just one single trade, for example. Right, so let's next take a look at the DX Trade platform and how you can use the built-in risk management or risk calculation feature to make better decisions regarding your lot size in the future. All right, so once you have the DX Trade platform open, could be on any market, on any time frame. For explanation purposes, I'm just going to be using the Nasdaq 100 on a 5-minute time frame. If you want to decide on how much lot you should be using, it's a factor or determinations actually calculated by where you want to place your stop in the first place. Always trade with a stop for any trade that you take. And depending on where that stop is, a distance from where you want to enter when you want to buy or sell, you can then go manipulate the lot size to only take a fraction of a loss, let's say 1%, 2%, or 0.5% of your total account equity. Right, so for explanation purpose, let's say you believe the Nasdaq's going to rise up from here and you want to buy. Next thing that will happen is that you'll have a new order window that pops up. Now, here you have the amount of lots. It could be preset to a default 2 or 3 or 4, it doesn't really matter. But this is what you want to be going to change yourself. So you only take a certain amount of risk per any particular trade. Next thing you want to do is go over here to protection orders. Click on that, always trade with the stop loss. So if I want to trade or determine my lot size, I'm going to click on that stop loss button over there. Just highlight it with a click. Then on the right hand side here, you'll have a drop down menu. It's going to ask you how many pips away you want to be placing a stop from your entry or the price level. I typically like using the price level, so for the sake of this explanation, I'll be using that. Let's say you believe that the Nasdaq is going to go higher from here, and I just want to get into the market as soon as possible. But I want to be placing my stop below this little swing over here. And let's say that's around 17,560. Then you can just go manually highlight that price over there and put that in there. All right, so with two lots, if I were to place my stop loss at 17,560, it could be further away, it could be nearer to your actual entry or where price is currently trading. That's completely up to you. All right, but let's say I want to risk $200. If I get into this with a market order right now, I want to buy the NASDAQ 100. My stop must be at 17,560. Then you can then, as you move your lots up, see here at the bottom by projected loss. If you get in that price right now, your loss will be about $250. So then, depending on the actual challenge that you take with the account size that you're aiming to achieve, for let's say, for example, with a $5,000 account, and you want to take a 1% loss, then if you traded with 2.8 lots as an example and price moved lower, I mean, you would have already breached your maximum daily loss limit in one single trade if the market didn't, go your way. So in that case, you'll have to move it lower until you actually see the $50 plus minus 1% of your account risked on that position if you were to place your stop loss at that level. You could, for example, decide to place your stop loss a little bit lower. Let's say it's 17,500. You can just go and change that around. Oops, 17,500. And now if the market would go all the way there, you'll lose about $70, right? So you'll have to adjust your lots a little bit lower again. Oops, sorry. I'm just doing that, right? So in this case, you'll be trading with around about only 0.3 lots. So very importantly, you need to manipulate or change your lot size depending on where you want to enter and where your stop loss is going to be. And you only want to risk if the market moves against you and it doesn't go in your intended direction and it reaches that level that you want to place your stop loss, that you only risk a maximum of, let's say, 0.5%, 1%, or whatever your risk tolerance might be. All right, so a lot of traders think, and the more risk I'm going to take and I get just that one trade right, then I'll be making lots of money. I'll reach that goal of achieving a funded account very quickly. But on the other side, it's a double-edged sword. Price moves against you. The trade doesn't work out, and very easy. In one single trade, you can reach your daily max loss limit, which unfortunately happens a lot to traders. Thanks for watching, and hopefully this video will help you determine the correct position sizing that is right for your risk tolerance and your account size the next time you take on another Hola Prime challenge.